Alright, this is a video that you guys have wanted for a while. I constantly get questions, but today it is September 25th. It is Thursday, 2:48 p.m. I didn't take no trades today, so this is not a live trade video, but for all the people that always ask about my Fibonacci settings, for the people that always ask what settings do you use, what fib do you use, I'm going to have a video exactly right here where you guys are at to kind of explain everything when it comes to the Fibonacci, what I use, how I use it, all of the above. So let's just keep it simple. Why do we use a Fibonacci? What is a Fibonacci? All of those beginner questions for the people that don't know what it is. Okay, perfectly fine. Whenever you're thinking of a Fibonacci, just think of it as a measuring tool. All it is doing is measuring a retracement from a high or a low. Now, the main thing you got to understand when it comes to the Fibonacci tool is understanding where to draw the Fibonacci. Which highs and lows are you going to be drawing the Fibonacci to and from? Because at the end of the day, everything that goes up comes down, right? Everybody always says we have pullbacks, we have retracements. That's exactly what the Fibonacci tool does. Say, for example, we have a low and we have a high. Wherever the current price is, the highest and lowest point is where you'd want to be able to draw the Fibonacci. For example, from this low to this high. And I'm going to get into the settings in a second after I explain it a little bit more. But this is what the Fibonacci does. You pull it from a low to a high, vice versa. If I were to invert my chart, if I draw it from a high to a low, it's the same exact thing. Because all it is going to be doing is measuring a retracement from a specific area. Now, where are the key places that you want to be able to draw the Fibonacci to and from? I'm going to keep it simple. Draw it from the previous day's highs and the previous day's lows. I'm going to also keep it simple. London session, highs and lows to the current time and prices, highs and lows. I will also say weekly. I'll say previous week highs and lows, just abbreviate it. So previous day's highs and lows, previous week's highs and lows, the London session highs and lows. You can even more broaden it out just by drawing them from session highs and lows. Like, these are all different anchor points that you want to be able to draw the Fibonacci to and from because it adds structure. You can draw the Fibonacci from any high and low, but that doesn't mean you're always going to get a trade. That doesn't mean that you're drawing it from an area that makes sense. When you take into consideration the trend, for an example, like here, let's just look at this day right here. What Fibonacci would I draw considering today, Thursday, price is bearish, and the day before, Wednesday was bearish, and the day before, Tuesday was bearish? Obviously, we can all see this is overall bearish, so I'm going to be drawing the Fibonacci from a high and a low. We're going to start off by drawing the Fibonacci from the London session high, which will be here, to the current low where price currently is, right over here, that we created at 2 o'clock. I'm going to draw a fib from this high to this low. That would be an example of drawing it from a London session high to a current low. What's an example of drawing it from a previous high or low? Up here we have the previous high. I'm going to start to get rid of some of this stuff just so it doesn't confuse you guys. I'm going to bring the anchor areas, basically places we're drawing them to and from, right over here. So we have the previous high up here, and we have the current low. So I'm going to take this fib, draw it from this high to this low. That would be another example of using a previous day's high or low to the current low to be able to measure a retracement, right? Now we're going to get into the specific fib settings because I have multiple fibs that I use for different reasons. The easiest fib that everybody can use is the 50%. If you're going to write them down, this is going to be the main thing you want to be able to write down. The 50% of the fib is basically a median point. You guys always hear buy low, sell high. That's exactly what the 50% is. Drawing a fib from this previous high to the current day low, you have the midpoint right here. Meaning, if you want to be bearish, if you want to sell, ideally for you to sell high, you would be wanting to sell above this 50%. So don't look for any trades for the short side unless it's at least this 50% area. Why? Because it's going to give you the best entry and you're going to be selling as high as possible. That doesn't guarantee you're going to win a trade, but if you have a good setup and you have something that fits your system and it just so happens to be going with the same bearish bias, because yesterday was bearish, London was bearish, and the day before that was bearish, obviously we can see that more times than less we've been bearish the last couple of days. So sticking to the bearish trend is just simply more likely than unlikely. So if you want to be able to short, you would ideally wait for price to at least get above here. It can go up here, it can go anywhere up here. But rule of thumb is if you're bearish, you would ideally want to be selling at least the 50% or higher. Vice versa, if you're bullish, same thing applies. If you want to be buying, you would wait until the 50% bare minimum. Now, there are specific cases where you're going to have a continuation where you might not even retrace that much, but we're going to get into that in a little bit. But the simplest fib that you can always draw is a 50%, and that's a very easy rule of thumb. Say, for example, you have your trade set up, you have all of that. The last thing you want to be able to draw is draw that fib. If it is a bearish setup and it so happens to be above that 50%, perfect, because now you have a premium price to sell at, and you have all your confirmations to be able to take advantage of price. So this is going to be the 50%. The 50% is one of the easier ones. So I'm going to write down over here the different fib levels that I use. So we have the 50% on the fib. The next one we're going to talk about is going to be the continuation, because like I said, more times than less, the average person isn't going to be able to have the experience that I have with the fibs. So drawing the 50% is going to be your best case most times less. That means when you have a little retracement and it doesn't go all the way up to that 50% and you miss a trade, that's perfectly fine because you're not experienced enough to understand how to take advantage of that trade yet. But when it comes to a continuation market, when it comes to a trending market, when it comes to having a lot of volume in one specific direction, you're going to want to understand the 38.20% on the fib. This is a continuation level. And an example of the continuation level getting hit, if I take this fib, I'm going to draw it back from the London session high to the current day low. You can see that is exactly where price is at right now. You can see that this 38.20%, this continuation level on the fib, and I'm going to show you the setting right here. This 38.20% level is a continuation level. What does that mean? When price is extremely bearish or bullish, price isn't going to always want to have the biggest pullback. It's not always going to pull back all the way. Sometimes when price has to go to a specific area, it's going to give you a little pullback and keep going. Now, a lot of the time, that little pullback is around that 38.20% level. Now, just because we have the 38.20% level doesn't mean I'm going to immediately take a trade. That doesn't mean I'm immediately going to sell. No, that is just gives me a reason to pay attention in this area, because if there's a fib, 38.20%, and then I also look a little bit deeper into price, and I see that there's a 1 hour gap right here also that could get filled, that is another reason why price could reject from this area. We're not taking trades just because of the fib. The fib is a reason why we're paying attention to the price action in the area, right? I pulled the fib from where? London session high to the current low. The 38.20% is right where price is, and there's a 1 hour gap. So that could lead price to possibly having a little continuation here. That is not a guarantee, but hypothetically, if you guys want to be able to go back into price, today is September 25th at 2:55. This is the price action. I'm expecting price to continue moving lower. Maybe not at this moment because it's just not the most high volume time, but I can almost guarantee we will likely keep on moving lower going into Friday. But that's something you can go back and look at after the fact. But this is the 38.20%. This is mainly used for continuations. You're not using the 38.20% level as a fib that you're using on a daily. You're using that when you're trending. You're using that when you have a very bullish or bearish bias. When London session has been trending in one direction, the day before has been trending in one direction, and you're barely getting any pullback, the 38.20% is the area that you're going to want to be paying attention to the most, because it's going to be the closest to at least give you some sort of pullback so that you're getting the highest price possible to sell in a trending environment. But I'm just going to put trendy. When you think 38.20%, think the trendy fib. And the direction doesn't matter. This could be for bullish, bearish. The direction doesn't matter because all the Fibonacci tool is a measuring tool. Now you have two of the levels. Now, the last main level that I use when it comes to looking for a retracement is going to be my normal fib setting. This is going to be the 62 to the 88%. The 62 to the 88% is going to be the deepest retracement level, meaning when we say buy low, sell high, this is going to be buying as low as possible and selling as high as possible. So if you look at where these levels are up here, this is the 62 to the 88%. And this is usually going to be the premium price. Think of it like this. If you have a car, you want to sell your car, you want to be able to sell it for the highest price possible, right? On US 30, you want to be able to sell it for the highest price possible. You want to get the highest price you could possibly sell at. Vice versa, if you want to be able to buy a car, you want to be able to buy a car for the lowest price possible, meaning if you want to get a good entry, you want to get the lowest possible price. The same thing applies when you're thinking of price action. So the 62 to the 88% is usually one of the deeper fib settings. But if you take that into consideration, you're not only just looking for a fib rejection, you're looking for other reasons behind it also. I don't see much in here right now in the 1 hour, but let's just say we go to the 4 hour. And we get rid of everything real quick. We can see at this area, we had this 4 hour gap right up here that price traded into. And would you look at that? It's right up there in the blue zone within that area. That is what? the highest price to sell at. Meaning, so if we retrace into here maybe later, it might give another entry. You can see that we already had a rejection from this area before. But hypothetically, this is just an area to be able to watch. If we trade into this area at 9:30 in the morning into that 4-hour gap one more time, we might be able to get a reaction to the downside. Maybe that's what happens tomorrow. Who knows? But this is just an area to watch. The fib is not a secret tool. All it does is it gives you an area to pay attention to. Why are you paying attention to this area? Because you're looking for the areas to buy at the lowest price and the areas to sell at the highest price. That is what the Fibonacci is for. You have the 50%, which is the rule of thumb. If you want to be able to sell above the 50%. Most times than less, you're going to be able to get a better entry. You're going to take losses, but that's part of the game. The 38.20% is going to be a very trendy fib. It's going to be a fib that you pull when price is not trying to give you a crazy pullback. It's going to be a fib that you pull when price is just pulled back just a little bit, but you have other reasons besides just that 38.20%, because when you have those small pullbacks, sometimes you might just get chopped up. The 62 to 88%, that is buying at the lowest price possible and selling at the highest price possible. Like I said, with all of these fib settings, you're not taking a trade just off of the fib. You want to have something else lined up. You want to have a gap within that fib. You want to have a big figure level within that fib. You want to have time aligned with that fib. You want to have all these other reasons with that fib. The fib is just one of many things that I look for to be able to get into a trade, but it's one of the simplest things and it's one of the things I've used the longest because it works and it's effective. And you can use it for more than one things. Now, when you think of these fib settings, these are the areas you're looking for to retrace to, right? But the Fibonacci is simply a tool that you can use for other things, such as your risk to reward. A lot of people see this, they see me use this, and I'm going to explain the settings and I'm going to explain how you can use it. What do I mean by the risk to reward? With my Fibonacci, if you go into the settings, I have different Fibonacci ones. I have the 50%, so if I want to pull the 50% of the Fibonacci, I can just pull it from London High to here. You can see that I got the 50% of this Fibonacci. If I wanted to change it to the continuation, I could change it to the continuation level. If I wanted to change it to my normal 62 to 88%, I could change it, and it makes it very easy. How do you do this? You just go to whatever, you just put the level in. For example, if you want to save this level, put it in just like this, 62, 88, check them, go all the way to template, save as, and then save it as whatever you want to save it. For example, test, I put test, save, and then it'll be saved under whatever you want it. You can click it just like the rest. So that's a little tip for you guys for your game. And you can have a risk reward tool also. The risk reward tool is what I use for my entry. People always say, how do you know what you're targeting? How do you know where your TPs are? For example, if I got into a trade right where we are right now, not saying this is a trade entry, but let's just say hypothetically, I wanted to get into a trade with a crazy stop loss of 200 points for a crazy TP, not even crazy, but just crazy in terms of how wide it is, but looking for about a 1 to 2. If I pull my risk to reward fib, I pull it to the entry, and then I also pull it to the stop loss. So I did this a little wrong. Gotta get this, let me fix it. Boom. Pull the stop loss, so wherever your stop loss is, pull the end of the fib there, pull the beginning of it to your entry, and you can see visually where your TP1 is, where your TP2 is, based off of what you're risking. So if you have a 200-point stop loss, this will be 200 points of profit. This will be 400 points of profit. And it's very easily just changeable. Say, for example, the trade wasn't risking 200 points and it was risking more of like 50. The same thing, I could just draw the fib, bring it right over here, and it can show me where my TPs are based off of what I'm risking. So if you're looking to catch a 1 to 2, you can visually see where your 1 to 2 is. You can visually see where your 1 to 3 is. You can visually see all of these different things. You're not leaving it up to chance. You're not making it so that you got to look at the numbers, so you don't got to really worry about the money aspect. All you got to do is pay attention to the trade, pay attention to the price action. And this is a tool that you can use very easily. And like I said, you can use the fib for multiple different things. The retracement setting, if you want to look at the settings, is just like this: -1, -2, -3. So I'm going to put that in text right here. Just how do you put it? -1. That looks a little crazy. Let me do it like this. -1, -2, -3, -4, and you just keep on going so on for all the TPs that you want. If you want a TP 10, put -10. But that's how you can do it. And then it goes based off of your stop loss. So if it's 57 points as a stop loss, this will be 57 points of profit. This will be whatever 57 times 2 is, whatever 57 times 3 is, right? And in this case, 57 times 3 looks like 179. So that's what it would be. But it's just very easy. And this is the fib. This is what I use on a daily basis. It's very simple, self-explanatory. You don't got to overcomplicate it. The Fibonacci tool is very useful. It's something that you can use to take your trading to another level. It's very simple. It's free. And like I said, it can do a lot of things besides look for the retracement. You can use it as a risk management tool. Just take advantage of the free game. If you enjoyed it, if you want to be able to work with me one-on-one, you can apply in the first link in the description where I go over stuff like this. Daily basis, you can live trade with me. I didn't take any trades today, but you can live trade with me. The same trade that I caught yesterday that I made the $2,000. I think I had the live trade on the last video, so you could go check that out also. And then the trade from Monday, that was $3,000, had the live trade on this channel also. You can check that out. But those entire trades were all done live with the team, called live, all of that. So you can apply in the first link in the description. Second link is a free trading training. And yeah, I'll see you guys in the next educational video. If you enjoyed these little chart talks like this and you want more, just comment questions, comment things that you want me to answer to help you, and I'll make a video on it. So I'll see you guys in the next one.